How are you guys doing? This is Ryan. Welcome back to the channel. Today we're going to be talking about how I built over a $50,000 Robinhood portfolio in just 10 months time, which was like a New Year's resolution for me because at the time the Robinhood portfolio was about $20,000 and I really thought getting to $50,000 was kind of a stretched goal. But we're going to talk about how I was able to do it. I'll play the clip here.
I can make 3 goals for 2020. I would say I'd like my Robinhood account that's currently at $20,000 to get to $50,000. That's one goal.
So guys, before we jump into it, please know that none of this is financial advice. I just document my own experience here on YouTube for my own personal vlog, entertainment for those who watch. Make sure you do your own research and rely on a professional. This is more for education and entertainment and maybe even inspiration. So I started this Robinhood portfolio about 10 months ago. I knew I had all the money I needed to buy this new house I'm living in now, and I was so hungry to get into the stock market because stocks were falling over the trade war. What really piqued my interest to jump back in the stock market was Tesla. Tesla was beaten up, no one liked the stock, and in the low 200s, I got very interested. I used to have a Robinhood account previously, and I was building a dividend portfolio, but when we decided to buy this house, I had to liquidate certain things, and I chose to sell my stocks in this account. I never sell my stocks in my 401k or IRA accounts. So if we pull up my Robinhood account, currently it's at $51,688.67. And in the past year, it has returned me 39.62%. So this account has gained in value $14,666.85. That's money I didn't put in. That's money that was returned to me by taking risk on certain investments. And guys, none of this is to be flashy. There's much bigger accounts than mine. I do think investing is like going to the gym, and you should celebrate your milestones and share your experience with others to learn more. But getting back to the portfolio, getting a return of 39.62% is really good. And that has really helped me grow the account so much faster, because the account grew by $14,666.85 without me doing anything. So the question is, how did I get a return like that? Was it dumb luck, or did my own research and due diligence help me get higher returns in the market? I like to think so, and I'll share my investing thesis and why I think I did well this past year, or the past 10 months. One of my big investing theses is I look for investments that have good fundamentals, like there's things going on fundamentally well for the company, but for some reason they have bad sentiment. They're getting bad headlines, bad press. For whatever reason, they're getting a lot of negativity and shareholders moving away from it. And Tesla is a great example of that. And also Ethereum, which I also hold in this account. I'll give 2 examples there. So Tesla often doesn't make money. And Wall Street was so focused on the fact that they weren't making money. But when I looked at the company, I saw a company that was growing so fast. For example, the Tesla Model 3, which they sell a bunch of those cars, they were selling at a 20% gross profit margin, and that number was growing. But when you have so much growth in a company, sometimes you don't make money because you're scaling, and scaling costs money. Ramping cars, to build new facilities, to do everything you have to when you're a growing company is going to eat up capital. So always focusing on net profits may not always get you the best return. So for me, that was sort of an obvious, really good opportunity. I also mentioned Ethereum. Ethereum is one of the best cryptocurrency projects, and they had a really bad year last year. As cryptocurrency fell out of its bull market, everyone ran to Bitcoin Core, the biggest coin in the market. And what we saw happen was Bitcoin maximalism. Bitcoin had a great year. It went from like 3,000 up to 10,000. Meanwhile, Ethereum did nothing. So I knew this trend was likely to change. So I bought 36 Ethereum at $152, and that investment has made me over $3,200. I also did well with another alternate coin called Bitcoin Cash. So these projects have good fundamentals, they're growing, the tech is improving, but the sentiment is a lot of fear and everyone just wants the biggest coin, Bitcoin. So these were huge contributing factors to the account's success. And then also, which everyone knows obviously now, we saw, in my opinion, the best buying opportunity in the stock market of the decade during the pandemic. The market crashed 38%, and I actually made a video in March at that time saying the stock market has bottomed at 38%. I'll just bring that up now because it just so happened to be right. So I'll link that video in the description below when I talked about the bottom being in for the stock market crash. And that really forced me to pour money into the stock market because I knew that this was a black swan event and we may never see stocks that cheap again. So I was literally doing everything I can to get more money in the stock market. And luckily my income wasn't affected too badly by the pandemic. I was able to figure out ways to make money. I even started driving delivery dudes at night to make more money to put in the crash stock market. I literally did that. So a takeaway with that is like you need to be very intentional and serious about investing to build a portfolio from nothing to 51,000 in just a 10 months time. So to quickly recap what I did to get my account to this level very fast, I created a stretch goal. I did not even think I was gonna be able to hit 50,000. I didn't really even think I was gonna hit 50,000 in 2020 in this account. So this always brings me back to a Larry Page quote, the founder of Google, in regards to goal setting, and that is, optimism is important. You have to be a little silly about the goals you're going to set. The phrase I've learned in college called, have a healthy disregard for the impossible. That is a really good phrase. You should try to do things that most people would not do. The second thing is I looked for companies with good fundamentals and bad sentiment. Last week I made a video about Nikola Motors and I kind of went hard at the stock, but I felt like they were the opposite of that. Nikola Motors is going public and they have great sentiment that they're gonna change the world, but the company doesn't really have great fundamentals, which I talked about in depth in that video, and I'll have a link in the description below if you wanna watch that. To me, that's not an attractive investment when sentiment's very high and the fundamentals are not very good. And then also taking advantage of a stock market crash, which doesn't happen all the time. We had not seen a stock market crash in 10 years, and it came and it left pretty quickly. If you look at the chart for my 1-year return, it literally is a V-shaped recovery. We've had a V-shaped recovery. And also I make investing a priority. I take it very seriously. And that's part of like this whole YouTube channel that I'm doing. It's a real way for me to be held accountable. And you guys can follow along by subscribing to the channel, turn on that notification bell. And also if you're enjoying the video, give this video a thumbs up. It greatly helps the video perform better and it helps grow the channel, and I really appreciate it. So I really think YouTube has actually made me a better investor. It holds me accountable. Also being on YouTube, I've met a lot of other great investors and I take away a lot of good things that they do, and I try to adapt and evolve and add more things to my investing strategy. Another big contributing factor to the account hitting 50,000 so fast is that I have focused a lot of investments towards disruptive innovation. And just so you know, this type of investing won't work all the time, but right now I am convinced we are going into a large tech boom cycle. And I've made other videos talking about this, but from my study of history is that stocks tend to run for 20-year spans. They continue to go up for 20 years, and usually after that we'll fall into a commodity cycle. So commodities will become very cheap during this time, and stocks will eventually get so expensive they'll go into a bubble. And I feel like we're likely to go into a stock market bubble, really fueled by tech and innovation. More investors will come to the stock market. The further away you get from like seriously bad crashes like 2008 or the dot-com bubble, the more people forget and the more people that come into the market, and that will inflate asset prices. And exciting things like cryptocurrency and Tesla and genomics will bring more people to the stock market. People will want to be a part of these things. So understanding what part of the cycle we're in. For example, in another 10 years, if commodities are really cheap and we need to overpay people to go out and produce things on farms, copper, and when these become bad businesses for such a long time, we're gonna have to allocate more capital over there to get the things we need to live our lives. So where are we in market cycles? We're 10 years into a stock market run, which started around 2010. So let me know what you guys think down in the comment section below. What are your goals for your portfolios? Have you hit any goals for your portfolios this year? Do you have any questions about my Robinhood portfolio? I wish you all the very best in your investing journeys. Thank you for all the support in the channel. If you want to support this channel even further and get some free stocks, in the pinned comment down below, there's my WeBull link. It's greatly appreciated. If you also want to follow me on Instagram, I'll put my handle here. I post there pretty much daily. And as always, I'll see you in my next one.
Done 3 goals for 2020. So if I can make 3 goals for 2020, I would say I like my Robinhood account that's currently at $20,000 to get to $50,000. That's one goal. Be a better golfer, which I won't be because I work way too much. I don't golf enough. That won't happen. The second goal I'll make about this YouTube channel, I'd like to have 5,000 subscribers by the end of 2020. So I'll put that, document that here. So first goal, 50,000 in the Robinhood account. Second goal, 5,000 YouTube subscribers. Third goal. What's a good third goal?
Busy balancing the family time.
It's always balancing the family time, and I'm honestly not, and I'm honestly somewhat happy with how I do it. You know, I know that, you know, when you're a young father, young man, you're not going to be able to give all of your time to your family. When I was a kid, my dad worked all day, you know, as a marine mechanic, and then he went and taught classes at night. Like he did what he had to do to build for his family. I always want to improve on that, so I'll make that a third goal, especially with another kid. And part of having this YouTube channel is to create other income that I could do from home and be around my kids more. So that kind of goes hand in hand. YouTube is a strategy I'm doing to build other revenue streams that I can do and be close to my family. So